Good morning, and welcome to the Leap Podcast, your concise, level-headed crypto market update from Leap Digital Investments. I'm Patrick Penn. It's Friday, the 20th of March, 2026. The crypto market continues in a consolidation phase following last week's pullback, with Bitcoin holding above key support levels amid profit-taking and tactical institutional flows. Let's leap in. Bitcoin is trading around $70,655, down about 5.6% over recent sessions. US spot Bitcoin ETFs have sustained strong inflows, marking the first multi-day positive streak of 2026, with allocation surpassing 1 billion recently, driven by BlackRock and major participants. ETF inflow pace has moderated from February highs amid asset rotation and macro uncertainty. Ethereum is at $2,116 week on week, down roughly 10%. Downside has been exacerbated by tight BTC correlation and the ongoing broader market correction. Solana stands at $89, down 7.5% week on week. Solana ETFs have recorded steady net inflows with increasing institutional interest. The network has hit record stablecoin volumes and an all-time high real-world asset market, which may support liquidity and payment use cases. However, divergence persists. Retail activity has increased during recent price weakness, while institutions distribute tactically. BTC ETFs saw their first outflows minus 163.56 million after a 7-day positive streak. This may indicate distribution patterns, with some participants reducing exposure into periods of demand. On the macro policy front, the Federal Reserve's March FOMC meeting concluded on the 18th of March, with a decision to hold interest rates steady, maintaining the target range for the federal funds rate at 3.5 to 3.75% in an 11-to-1 vote. This marks the second consecutive pause in 2026, following cuts late last year, as policymakers cited persistent inflation pressures, mixed labour market signals, and heightened uncertainty from the ongoing Iran conflict. Officials emphasised data dependence amid uncertain geopolitical and energy impacts. Chair Powell noted in the press conference that inflation progress has been slower than hoped, and the Fed remains focused on balancing its dual mandate without overreacting to near-term shocks. The higher for longer stance reinforces a cautious liquidity environment for risk assets such as crypto. On the geopolitical front, the ongoing US-Israel war with Iran continues to escalate regional tensions. Recent developments include Israeli strikes deep into Iran targeting military and energy infrastructure and threats Strait of Hormuz shipping. Oil prices surged amid fears of broader disruption, with Brent crude recently trading in the high $90 range. The current levels reflect some easing with extreme highs, but remain significantly higher, adding upward pressure on global energy cost and inflation expectations. President Trump has reiterated no ground troop deployment while signaling sustained air operations. Mediation efforts have stalled with no ceasefire in sight. This macro uncertainty adds volatility pressure to crypto, though structural crypto demand remains intact. For context, on traditional safe havens, gold has seen a notable pullback recently, trading around the mid $4,800 per ounce after dipping from recent highs near $5,000 plus earlier in March. The current drop may reflect a market correction, not a change in the long-term bull case for gold. Some market participants view this as a potential accumulation opportunity. Markets move on what dominates right now: which is a stronger US dollar plus higher for longer interest rates. Markets pivot fast on new data, policy shifts, or risk stabilization. Remain calm, stay informed. This concludes your market update for the 20th of March 2026. See YouTube and Spotify links for more information. Thank you for listening to the Loop Podcast.